Hey everybody, I'm Howard, and this is Adam's Retirement Corner. So today I want to talk about investment return, and I don't want to make it too dry. I just want to talk about expectations. So those of you who are in retirement and those of you who are coming up to retirement should have expectations with the money you have saved and invested. And I don't care whether we're talking about $5,000, $10,000, $50,000, $100,000, half a million, a million, whatever it is you've invested, you should have some expectation over whatever period of time you're looking at as to how much that investment will return, or those groups of investments will return. And what I mean by that is, what is the combined return you expect to see over whatever period? And I'm asking this question, and I'll talk a little bit about me, and I'll talk a little bit about the world. And this is coming from a couple articles I've seen recently, probably on Yahoo, maybe on YouTube also. As the market does really well as it's doing now, you'll have a lot of articles coming out about the stock market, and it's doing well, so it's going to continue to do well. Or the market's doing well, and because of that, now it's not going to do so well. It's gone up too high, it's going to go down. It's got great momentum, it's going to continue to go. About a month ago, beginning of the month, most of the banks and investment houses came out with what their target returns are for all the stock market indices for the year. I reviewed those in January. They were much higher when they came out at the end of May. And, that just goes to show you they're guessing. They're educated guesses, but they're guessing. Here's what they said it's going to be for the year. 5 months later, it was, it's going differently than we thought, so here's what it's going to be. 3 months from now, the markets could turn on a dime and then come out with lower estimates. So, take that for what it's worth. They're guessing. They're probably more educated than we are on those guesses, but they are guessing. So, another article I saw just recently on Yahoo was the returns for various asset classes over various periods of time. Stocks, bonds, cash. It went into gold and real estate and art and coin. Whatever you could see as an investment. They sort of covered how much these things have returned over time. But the point here is, you may know what they've returned over time, but what do you think they'll return over the future period? And here again is where reality is separate from perception. You may have totally unrealistic goals for your portfolio, or you may be overly conservative, where you're estimating your return a lot lower than you're likely to get. And either way, you're probably basing what you're going to spend in retirement or when you're going to retire based upon those returns. So, for instance, right now, I've talked about this before. I keep a large amount of cash for the idea that either the bond or stock market won't do well, and when I need cash, I don't want to take it out of those investments. So I keep 2 to 3 years in cash. So right now, my portfolio mix, including that cash, is about 52 stocks, 38 bonds, 10 cash, 10% cash. So, my return expectations are based not only on that asset allocation, but what kind of stocks I'm invested in. I have some international, I have some REITs, I have some small cap, large cap. I have a mix. My bonds are kind of locked in because I buy bonds and hold them to maturity, or I buy iShare iBond funds and hold them to maturity. So I kind of know pretty closely, short of any defaults, what I'm going to return on that. So I model 6%. And that tends to be a little conservative, but I think for my portfolio mix, it's not so conservative. I think I'm in the ballpark. That's not to say I won't get 8, or I've been outperforming that a lot since I've retired. It's coming up on 2 years at the end of the month. But that's not to say the 2 years after that, I won't lose 6, 8, 10, 12% a year. And that's another point I want to make here. Regardless of what you're hearing, regardless of what you read, the idea is to stay invested, keep your portfolio to where it was designed to be, if you need to rebalance once a year, or every 2 years, or every 6 months, whatever you've decided, and whatever you've decided to withdraw, stay with that. That's what I do. It's hard sometimes. It's hard to stay disciplined. When the stock market's doing well, we have what's called the wealth effect. People tend to spend more money if they're invested in stocks. I just went out and bought a new softball bat because the stock market, not because the stock market was doing so well, but I wanted a new bat. I went out and bought a bat. Had the market been dumping on me, I might not have bought the bat. I might have waited a while. Bought some other toys too. We've talked about that in the past. So, look at what you have, and my guess is, and this is what I want to talk about in the comments. If you can, break down, stocks, bonds, whatever you have, and what you expect to see in return. My guess is, and my hope is, that those of you not yet in retirement have a larger stock portfolio or a larger stock allocation, and your return expectations are a little higher. Those your retirement should probably have a little bit of a lower expectation because your asset allocation may be different. My allocation is going to tend to skew higher towards stocks as time goes on. So my expectations might be higher as time goes on. It sounds counterintuitive, and I don't want to get into that now. I've talked about that in the past. It's based upon the way I withdraw money. So the other thing is, I read a lot about in comments, both in Yahoo and YouTube, because cash is paying so much right now. You can get money markets well over 5%. You can lock in some CDs. People are saying they're putting all their money in cash or CDs, and I get that. Hey, I'm happy with 5%. I can live on 5% for the rest of my life. Keep in mind two things. Number one, even though it seems, because of recent returns in cash over the last 5 years, that this is great and this is wonderful. You don't need to take a risk in bonds or stocks, but over time, regardless of where cash is, stocks and bonds tend to outperform cash. You're probably hurting yourself if you lock in a long-term, 100%, 80% cash position, whatever it is. I once told a coworker that if I could lock in I forgot what it was, 6 or 7% return for the rest of my life, I would do it. But that was at that time. So, that was when interest rates were at zero. And in essence, we were getting almost zero on cash. So, you have to temper that with what's going on now. The other thing with cash is that 5%, if it's a money market, not going to always be 5%. You saw it turn from 0 to 5%. It can go from 5% to 0 if we hit a recession or another COVID type situation or any other catastrophe. Keep that in mind. The other thing is stocks are really high now, but I've been hearing this for years. Stocks are high now, valuations are high, we're going to get a lower return. Wade Pfau, Ben Felix put their, retirement withdrawal rate down at the 2.4 or 2.7% instead of 4% because they thought valuations in stocks were too high, and over the long term, that's going to regress back to the mean, and you're going to see lower returns. And that still likely will play out. I don't doubt that the price earnings ratios we're seeing now will come down, but how long could that last? It could be the rest of my life or your life if you're 60 or 70 or 80. You never know, and that's kind of the point. The one thing I want to point out is the only individual stock I own, I've talked about this before, is Apple. I just looked it up. I bought Apple 8.5 years ago, January, I think it's January 2016. After stock splits and dividend reinvestment, I have a cost basis of about $23. And it just hit, I forget it, 216 or something like that. I have a 900% return. But all along the way, people kept saying, oh, it's too high, it's too high, it's too high, it's going to come back. I bought it at a PE of 15, and I bought it because it had a PE of 15. I saw a growth stock with a value stock valuation. So I bought it then. And as it's gone up, I sold some, I don't know, it was a couple years ago maybe at 150. I sold some more maybe within the last year at 185. It dropped way below that and now it's 216. So it keeps going up. The reason I sell it, not only do I own it individually, but it's in one of my growth funds. So it keeps becoming a larger and larger percent of my portfolio. So if it hits 5%, I gotta, I'd rather not be higher than 3%. So I keep selling it off, selling it off, selling it off. And had I held it, I would have had a whole hell of a lot more money. But you have to do the prudent thing at the time. And that's why I say, even though you may think valuations are high now and you want to get out, stay the course. Because it may, stocks may fall. We may see a 20% correction, 30%, something like that. But every time we've seen that in our history, they've rebounded and gone on to new highs, new highs, new highs. And if you've got a long enough time horizon, I feel like I have at least 20 years. If you're 90, you don't feel that. If you're 80, you may not feel that. And that's why as you get older, people tend to, change your allocation to more bonds. But my message is I'm staying the course. I'm not changing anything I do because of where the stock market goes. I'm not changing anything I do because of where interest rates go, and I'm not predicting interest rates. And I've told you this before, I'm not in the business of predicting interest rates. I have no clue where they're going. My sense was they topped off at about 5, and we were probably going to see them go down, but that hasn't happened. How many people thought we'd see interest rates going down, but they haven't. So stay the course is what I do. Tell me what you do though. That's the most interesting part about this. I'm curious about people's perceptions of what they'll earn, and how much. What's your runway? Do you have 30 years, 20 years, 10 years? What do you think your return will be? What are your allocations? Am I an idiot for what I do? Do you have advice for me? You have advice for others? That's perfectly fine. These are the conversations that are really helpful and beneficial to everybody, I think. So thanks for watching. Thanks for listening. Please subscribe. Sorry I went a little long here, and we'll see you next time. Bye.